what kind of sectors should we as investors keep an eye on?
So I think the key sector to keep an eye on, and which may come as quite a surprise to most of us, is that the Nikkei 225's tech sector, it comprises a larger portion of the Nikkei 225 than the S&P 500. The tech sector makes up about 50% of the Nikkei 225.
50%?
Yes, it's actually half of the Nikkei 225. And when you compare it to the S&P 500, it's just at around 30%. So all this makes the Nikkei 225 very sensitive to tech, as well as the global AI trade. Just to add a little bit of fun fact, the three biggest tech companies in Japan, while in the US you have the Magnificent Seven, the three biggest tech companies in Japan, they actually all have exposure to AI, but it's very different kinds of exposure. The biggest will be Advantest. They essentially produce semiconductor testing devices that are essentially used to test the finished semiconductors, test their reliability, test their performance. The second will be Tokyo Electron. They essentially produce the equipment that goes into manufacturing the chips themselves. And very lastly, perhaps the most well-known will be SoftBank. Its role in AI is more of an investor rather than a company that's involved in the value chain, invest in many tech startups across the world. So all this, I would say, makes the Nikkei 225 very tech sensitive, and is why it's the key sector to watch.
You talked about the heavy weightage on tech. Are there any other dark horses that we should keep a lookout for?
Yes, definitely. I think something that first comes to mind will be the industrial sector. There are little-known companies like Fanuc, as well as Yasakawa Electric. So both are constituents in the Nikkei 225, and they are, however, very different from the tech companies I mentioned. They are essentially leaders in industrial robotics and automation. For example, they produce robotic arms that are used in factories to handle assembly lines and packaging. We have other industrial companies like Kawasaki Heavy Industries. They essentially manufacture transport equipment and industrial heavy machinery for both the military as well as commercial use. They make ships, aircrafts, rail cars, and they're perhaps most famous globally for their motorcycles.
Oh, it's the same company?
Yes, it's the exact same company.
Oh, okay.
I'm pretty sure you may have seen Kawasaki motorcycles. Yeah. If you have been to Japan, I'm pretty sure you are familiar with the Shinkansen or the bullet train. And Kawasaki was actually part of the original team that was responsible for building this Shinkansen. They even manufacture aircrafts for Japan's Ministry of Defense.
Oh wow.
Yeah, so this is why I think it's a dark horse as well. And of course, when we talk about dark horses, we definitely can't forget the top performer in the Nikkei 225 this year. It's actually a company called Mercari. It essentially operates in the consumer-to-consumer used goods market or second-hand goods. And it's very similar to Carousell in Singapore. You may have used the platform yourself. They essentially allow users to buy and sell second-hand items online through a mobile app, and then they charge a commission fee, and that's how Mercari earns the money. But what I think separates it from Carousell is that Mercari actually has their own logistics infrastructure. For example, for Carousell, as a buyer, you will receive your items either by meeting the seller in person or through third-party deliveries. But Mercari has their own app-integrated shipping. So you just have to use the app, and then you can ship the products to yourself. So items are frequently mailed, and there's less of a reliance on in-person meetups. And I think the biggest reason why Mercari is outperforming is because Japanese consumers recently been struggling with higher prices. So the resale and second-hand goods market offers them an area where they can get used items at a cheaper price.